I may have 4 positions on the same trade, but 2 may be tighter risk and 2 may be larger because of the room that I'm giving it. But they're all falling under, like, let's say my risk is 2%. If they were all to hit stop loss, that would be my max stop.
Today, we're on with Alyse Amores. She's one of those I want to talk to who has been managing funds, trading her own funds as well. So good to have you on the podcast, Alyse. Looking forward to talk and discuss trading. So good to have you here today.
Thank you so much for having me. I'm excited to be here.
Let's start with this. Tell me a bit more about kind of how you started trading. I guess this was years ago, but tell me kind of the story of what got you in the market in the first place.
Yeah, so I started trading in the summer of 2017. It's something that I had already taken interest to previously, but I just didn't know, just like most people, where to start, how to do it. It just seems like this whole big monster that just kind of lurks in the corner that you never really address because you don't know the process of how to start. And there is no one way to start and one way to do it. But even though people like to have negative experiences or they don't speak highly on trading MLMs, that is how I got into it initially. And even though it's something that I obviously didn't stay with and I only did for that initial year, it was my introduction in terms of education. And for that, I am grateful for. And it helped put me in a world of different traders. Obviously, some are marketers for sure. But to me, I just needed the introduction to what and how. So I knew where to go from there, right? In terms of starting, like if you're starting and not doing it through that, I just tell people to go to brokers. There's so much free content on brokers that they have about this, like starting trading and learning the in and out of whatever market you're trying to do, whether it's futures or options or whichever. But that's a good starting place for most people at this point in time. Nonetheless, that was my introduction. I did that for the initial year, went through all the education and felt like I wanted more. But see, now that I had a base understanding of what I needed to look at and what I needed to study, then I could branch out further and study different topics and from different people. And so over the years, that's basically what I did. And then in that period of time, you're always looking at what works best for you, trying new things, adopting, taking away things. I think people forget that part. Taking away stuff that doesn't work for you while implementing things that works better for you. But to make a long journey short, that's what I've been doing over the 7 years.
Was it a pretty straightforward process to learn to become profitable, or do you have to, like you said, take away a lot of things to be able to get to that point?
It's not really straightforward in the sense that it's not going to be the same for each person. So although a lot of us tend to go through the same process, it's not intentionally that way. But that can vary for each person because what we struggle with varies with each person. Some people have no issues with risk and some people do. I've seen people who are so risk adverse that they don't want to size up at all. And then I've seen people that, like, that's the only way they know how to trade. When they need to scale back and follow risk, they're not able to, right? And those are two completely different issues, although they may root from a similar causation. The way that you implement your personality into your trading can vary with each person. So it's a very individualized process for each person.
Did you have any mentor along the way or anyone to coach you on how to actually do things, or did you learn all by yourself?
I definitely had so many people that I studied and learned with. I don't like to emphasize one specific mentor because in the time of 7 years of learning, I feel like I've learned from so many different people that it's hard to really name one. A lot of the people that I was studying with in the beginning, we were just kind of learning things together and implementing processes that were helping us get better as traders. I would like to mention, I guess, BFI or Zero to Empire. That's one of the main people that I feel like has really improved my trading process in the previous years. But it's such a massive list of people and strategies and techniques that I've studied that we would be here for a long time to go over 7 years of studying. So I don't like to just name one specific person, but say that I've been able to soak in a lot of knowledge from all different types of experiences and traders.
So you mentioned 7 years of learning, but how long did it take you to actually become profitable from when you started?
So I was able to be profitable fairly early on, but I do state every time I talk about it, I almost don't like talking about it anymore because I feel like it sets an unrealistic expectation. But I do say that from early on, I was quick with risk. And the reason why I say that is since I was journaling early on and I was seeing mistakes, I was able to see these mistakes quicker. It's all really just all about implementation, right? So how quickly people get things and improve the market is really how quick you are able to implement correction on your mistakes. So some people take years for those corrections. Some people, it happens 2 to 4 times and they're like, this isn't working for me. And they make a quick change and it's luckily something that was a beneficial habit and really improves their trading. I would do also say that sometimes in the beginning, doing well is a little bit out of ignorance. And the reason why I say that is like the confidence that is there is unrealistic, and it actually will help you in the beginning because you don't know better that mistake in time can actually become a bad habit. So a lot of people will have some type of beginner's luck in terms of like you got lucky a few times, but it's also hard for you to implement what you've done repeatedly in the beginning because you don't know what you did to get that win, right? So that's why journaling is something that did help me, I think, get past a lot of that quicker because I could actually see what I was doing and what I needed not to be doing. So implementing those changes quicker, I think, is what helped a lot. But I do give a lot of my credit to some beginner's luck and then a little bit of ignorance. And because in time, some of those habits that worked for me in the beginning in a specific market may not work later, right? So I may have been in a luckier market at the time with really bullish market versus consolidating market. So what I did at this time may have not worked later. And as you trade different markets and different conditions, that's where you, regardless of what type of luck or lack of luck that you had in the beginning, you still have to see what you were actually doing that worked and be able to implement and repeat that process. To fully answer the question, I was able to compound an account and grow that for over a year to be able to leave my job, but I was still working for that period of time. But it wasn't like I became a millionaire doing that. I just saved my salary pretty much, and I was adding into it as well every single paycheck, which was biweekly. So a part of that was that as well, but it wasn't a massive amount because I was pretty much like paycheck to paycheck. So it wasn't like this crazy amount. But if you understand the power of compounding, I was able to do that. And the biggest part of it also, the reason why I was able to grow it is because I wasn't taking withdrawals at that period of time. I continued to work. I compounded the account for the period of a year while I was learning. And then I just learned in time, I have to follow risk. I have to minimize my losses and make sure that my wins are larger than my losses.
So tell me a bit more about your trading style these days. What do you focus on? What do you specifically trade and how do you make it work?
Yes. So I try to look in the market where I feel like the largest players are where the biggest volume is in the market, whether it's whatever you want to call that. I don't care what people call it. I'm not here to debate what people think it is. I just know there's a lot of volume at certain prices in the market that I'm going to be attracted to, and I'm going to try to trade those areas. So those are the areas where the liquidity is going to be, right? So I'm just going to be interested in where that volume is, and then I'm going to focus on those areas. So there's different ways I recognize it. There's obviously simple old school supply and demand, and then support and resistance, very simple things. I think sometimes when people see the ways that I trade, they're quite surprised about how simple it is. But in my experience, I see people make things really complicated. And then that's why I'm talking about we have to take things away. Sometimes you have to go back and re-simplify things. It's not necessarily that I think you're learning something like a simple concept, but in depth, right? So that's where the experience comes in, is that you're learning something that maybe you may have learned in the beginning, but you didn't understand it. You didn't understand how to use it, how to apply it. And in that time of the experience, you learn better how I can trade these specific tools or systems appropriately and what works best for your trading style. So I'm simply trading in line with that. And sometimes I use, like I said, supply and demand, support resistance, but a lot of times I'm looking at wicks, right? I'm looking at where buyers or sellers were absorbed into those previous trades. And so I'm looking at when like the market or that price or the area that I'm looking at when it's ready to trade versus when it's not ready. So a lot of times highly traded volume areas will take a little while to set up because more volume is being added around those areas. And so a lot of times I'm looking for validation of getting in when that trade looks like it's ready. And that's where that experience comes in, right? In the beginning, you may be getting in late because you miss everything, you're chasing the trade, and then eventually you start to anticipate things, and then you actually start to get in early. So in that time, it's a little bit of balance of like, okay, I was getting in too early, now I'm getting in too late. Where can I get in better, more efficiently? And it's not about perfection, right? Like trying to catch the top and bottoms of every single move may not work for everybody, and it's not really something I even advise for everybody, but it's more so for me finding what validates a trade and when I need to get in and when that price looks ready for me. And because in time, I've been able to hone in on what works for me in terms of the validation of my setup, I'm able to get in trades that tend to play out more often. And not only will my trades invalidate quickly when I'm wrong, sometimes I will just not take a trade. That's what happens again with experience. In time, you see trades that are less probable. And instead of losing on those trades, you actually just don't take those trades anymore. So experience to me has been the ultimate teacher in terms of how to implement my strategy. But in time, like I've really been using a lot of the same things and just honing in onto what works best with supply and demand, with trading in volume, and looking at liquidity in the market and trading in line with those opportunities.
Do you use any indicators, or is it all based on price action and volume?
It's mainly price action and volume. Even when I typically will have indicators, those typically ones that are volume based, right? So in time, once you train your eye, that's the only reason why I don't need them as much. But I'm not one of the traders that's like indicators are not helpful. I definitely think that they're very helpful in the beginning. And if your system is based off of it, then use it. Like there's no like trophy for trading with or without indicators, right? It doesn't make a difference. If one of the most successful traders is using indicator, when you tell them they're wrong because you don't like indicators, it's like people get so attached to like bragging about not using indicators. It's like when I say I'm not using them, it's not to brag. It's just to say that my strategy isn't dependent on it, but I do not like to crap on it at all because I think it's appropriate for a lot of people. And it helped me learn what I do see, right? In the beginning, I definitely used moving averages a lot. And when I was studying those areas, I started to be able to see the price action in those areas of a valid reaction. So eventually I was able to study that price action without the moving averages, but I was able to study those specific areas because of using that in the beginning, right? So that's why I would never be so arrogant to say that, oh, I don't use these and you don't need to, because it helped me in the beginning to know when and where to study different price areas.
Tell me about what motivated you to go look for more funds and kind of what you've achieved so far in terms of funding for your trading.
In the beginning, my only intention was to trade up my own money. I didn't think there was a possibility for me to be able to leverage any other form of money, whether it's from props or PM or from people. I just thought that I would just trade my own account and build it larger, and that was that. It wasn't really until I was introduced to PAMs, our account management, where I really saw, oh, this is a possibility that I could do this and be able to leverage that money and be able to grow things quicker, because obviously it's quicker to be able to trade that before you've technically built your account to that amount. So that was really where I was able to get more experience quicker. But it wasn't that I was seeking that out as much as it kind of was something that came to me. But with that said, that's how my journey has changed a lot. So although I've been able to do that for a period of time, and I've been able to leverage prop firms for a period of time, and I'm not talking about like brick and mortar prop firms. I'm talking about, well, I'll call it funded trading or stimulated trading, because really that's what it is. So, because they have different, I'm not talking about like a brick and mortar prop firm where you're trading with other traders, right? So that was definitely an opportunity for a period of time. But for now, since I like to prefer to trade my own strategy with my own rules, that's why I kind of worked my way back to that. So currently, I originally started in foreign exchange, and in the last year, I've been dabbling with futures. And so that's what I'll be doing in the future, ironically, is trading futures. So, and trading my own account and just trading it exactly the way I want with my own rules, my own risk, without worry of violation or any type of anything but my own strategy.
I think prop firms and like investment capital is a good stepping stone, but eventually you got to build your own account too. I think that's a good point. Any reason why you want to go to futures, or do you see a big difference versus Forex, or is it pretty much the same thing, just a preference thing?
It's similar in the ways that I'm trading it. The only main difference for me more so has to do with the brokers. Since I am a U.S. trader, our options are very limited on what we can use. And I like to have my options more open. And actually, going back to the last question a little bit, that actually is more of a reason also why I did trade with investors or with other capital, is that it opened up my options for the brokers that I could use, because if they're able to have a certain broker, then I'm able to use that. That was another reason that pushed me to it. It was not just because of the funds. That was actually a major key in that. But then as I've grown my capital and I've had larger amounts of money that I'm trading, I need to make sure that I have a really trusted broker, long-term track record of years of returns and success and whatnot. That just works better for me. So I was like, since the two main things that I was trading, which is going to be like indices or CFDs and commodities a lot, that translates well to the to futures market.
Tell me about the mindset of managing someone else's capital or like a prop firm capital. Do you feel more pressure to perform, or is it easier for you to do it because you have that kind of like a job aspect of like just you trade the account as a different kind of company, or how do you see that?
The pressure is there, and that's why you have to make sure you work with people who understand that, but also with places that have realistic desires for returns. So I think that's what hurt me in the beginning, was because I wasn't doing it with like professionals to an extent, in terms of like people who've had long-term experience in the field. They'll take whatever returns you give them, right? So if I'm going by my own returns and numbers that I'm used to trading with a smaller account, that's gonna be way different than how you manage risk with a larger account. So it wasn't until I traded with higher level traders and seeing, oh, well, these smaller returns are highly realistic. And that's also when I was studying, that's when I was studying hedge funds and things like that. And it's like, okay, the average traders and investors are simply trying to beat the market, right? So if you're doing 8 to 12% in a year, that's really feasible for a lot of people. Obviously, there's hedge funds that have higher returns, and there's that as well. But for me, I was studying like long-term returns and throughout different years. So even if a fund is very profitable, it doesn't mean that they're doing that every month, and it doesn't mean they're doing that every year. So once I started to see that differently, then I started to have tighter risk and smaller goals for what I was making. And then that helps you trade less risky, because you're not having unrealistic expectations of the type of risk that you're using and the type of goals that you need to do. And that in itself will take off a lot of the pressure of like, I need to be doing this, because even if you're skilled enough of a trader to be able to do that, to try to do that consistently is not realistic at all. And then you're setting yourself up for failure of like, also even like with the investors, you're setting up a false expectation. And when you're doing something that's actually realistic after that point, they look at it as like, it's not realistic because they've seen this standard from you, right? So it's really better to follow better risk and obviously size in and take those opportunities when they're there, but they're not always there. And trying to force that by producing like massive results each month is where the pressure is. And you've kind of self-created that by having unrealistic expectations.
Did you actually set goals for yourself, or like what percent you want to achieve, or did you just let the market give you what it could give you and that's it?
That was my main change. I did in the beginning, and then I changed it to just follow risk, and I get whatever gains comes from me following proper risk. So that was what changed in those like few years of doing that. Was first I had a goal, and then that expectation set disappointment that didn't have to exist because I may have done well, but I didn't reach my goal. So therefore it was like, oh, well, I didn't have a good month, but it's like, but I did. So a lot of it was changing my perception around what was good for the longevity of trading. That's only good for short term, and it wasn't realistic. It just didn't work for me. And so I'm hoping that regardless, like obviously not everybody's going to trade funds, but I hope this lesson of what I'm speaking about applies to people in their own trading, is that you follow risk and you follow implementing your proper strategy, the returns will come. But if you're focusing, basically you have to focus on the cause, not the effect, right? So focus on the process, not the outcome.
Do you have any specific rules for drawdowns or for risk that you try to respect? Like don't lose more than X amount of dollars or X% of your account, or?
Yes. So I know people do risk differently. There was a period of time where I always did set risk on each trades. It was just easier to do risk that way. But now I tend to have an overall risk for that day. And then how I divide that up depends on my trading opportunity. So what I mean is this. Before, I may have risked 1% every trade or 2% every trade. And that was like, but then with that, it's like you have one loss, you're done trading basically because you're using your risk for that day. So now the way that I do it is I have a certain amount of risk that I'm willing to risk that day, but I will typically break it up by positions. Now, if it's a trade that looks really probable that I think is a great trade, I may use that full risk, but typically I'm splitting that risk into 2 to 4 positions. And so that way, if I lose on 2, because I may even use tighter risk on 2 of them and larger risk on the other one. Not larger risk, but larger stop. Let me say that differently because that's not appropriate. I may have 4 positions on the same trade, but 2 may be tighter risk and 2 may be larger because of the room that I'm giving it. But they're all falling under, like, let's say my risk is 2%. If they were all to hit stop loss, that would be my max stop. But I'm risking different on each position. So 2 may be like 0.5 and the other ones may be, 0.25, but more positions. So something like that.
Do you feel like having multiple positions per kind of trade helps you to capture bigger targets, or why do you do it that way?
I do. So previously, I used to do partials more so often. I would do the larger positions because I was doing the full risk, and I would do partials. But because I like to see I will stack along the way, like as the trade plays out and different pullbacks where there's more opportunities. But even with the full risk on those smaller trades, it's less trade there. And I wanted to see trades play out kind of like with that full position, right? So the thing I like about having multiple positions is that they have different targets. So I'll have like tighter targets and I'll have deeper targets based off smaller to higher time frame. And so because I'm doing it that way, I'm able to take off risk and play around with it a little bit more. It offers me more flexibility. So I like to do it that way because when you're doing partials, when you have that initial stop, it's like a full stop and that full amount, where if you would have only started adding positions as the trade was playing and things like that, it just helped me with my risk a lot better, and it helped me see trades play out. So it helped my mental in terms of like actually seeing trades play out instead of taking a lot of partials. And then by the time it plays out, it's like there's not much left on the train, but it's still going, right?
Interesting. That's a good way to do things. I haven't thought about it, so it's pretty cool. Now that you're social media, I guess you have people reaching out to you who are into prop firms, they try to take funding accounts. What do you see as the common mistakes these people make with prop firms and like capital in general?
Risk. I'm always going to come back to risk in general. So initially, when prop firms were first out, I definitely felt like it was a good thing to help people with their risk because people weren't following any type of risk parameters. But this is when I felt as though I said that backwards. The rules were a little bit more loose in terms of like they were more general. So it was like daily and then overall risk. That was it. Now it's come to like consistency percentages, this type of not adding in drawdown. It's become more specific, which is okay. But to me, my main issue is this: if there's so many rules there that it changes my strategy. Like the way I trade, if I'm already, assuming that I'm already trading profitably, obviously if you're not trading well, then it may be helpful. But sometimes too many rules can actually make it hard for you to be profitable because you're overthinking and then basically you're not able to execute well, or you're overanalyzing and you're just not able to make moves. And so in my experience, people either are just not good with that risk, or because there's so many rules and they're trying to checklist all of them, they're overanalyzing and overthinking. So a lot of times that's what I'm telling people to do is simplify their trading. If the rules and the guidelines you have to follow are already complex, having your trading also be complex, it's too much going on and you're not able to, you're creating a bunch of confusion. So you want your strategy to be as simple as possible, especially if the rules are slightly complex, right? So that's one of the main things that I try to focus people on is like, you're a lot of times implementing stuff that you don't need. So a lot of times what most people need to work on, besides obviously strategy, is biases that we deal with, right? So I talk about psychology a lot because a lot of what trading is sort of against what our human nature is. So we're inclined to seek things that are enjoyable and pleasurable and then go away from things that are not enjoyable and not pleasurable, right? Losing money is very unenjoyable for a lot of people, right? So a lot of times they're going to be avoiding that. But in the process of doing that, it's typically like bad habits that are not working out well, right? So when I was studying like how to get better at trading, I was looking at biases a lot, right? So just to go over a few of the things that I looked at and kind of studied was like confirmation bias, loss aversion bias, anchoring bias, overconfidence bias, and like gambler's fallacy, right? So some of those things have to do with like loss aversion bias. You're basically constantly playing defense and no offense. Like if we compare it to sports, right? So it may be good for protecting your risk, but then you're not making money. You're not being profitable because you're not looking at ways to. There's a way to practice proper risk, but still implementing an offensive strategy, right? So if you're only doing this, you're trading in a place of fear and you're trading in a place of uncertainty, and you're not implementing good processes because you're only looking at lessening and like you're scared and you're trading, right? So I had to look at things like that. Anchoring bias is basically like relying on one piece of information heavily. So you have an attachment to one thing and you keep doing that. So people will tend to do that a lot in their trading. They'll have one type of habit that they have a hard time getting over, and they're anchoring it based off one piece of information or one experience that they've had, and they've now implemented that as like their baseline of their strategy, and it's not something that's actual correct information. There's also recency bias, right? That was the other one that I kind of forgot. So that's using like recent info into future decisions. And so if you want to work against that, then a lot of times like trade journaling, if you're doing that over a long period of time, you're not doing only recent information. So you're looking at previous information, a lot of data from many trades over a long period of time. It's better to take and make decisions off of all that data versus only a short period of time, because then you're kind of using a lot of recency bias. So, and then lastly, gambler's fallacy, basically like you're always assuming that the trend is decreasing and then you're always closing trades early and you're not letting them play out because you think that's always changing. And like that's when you're basically trading like purely based off of luck and you're like the addiction of like, oh, this is going well, but it's not going to last. So it's like, and you're not able to hold trades, right? So me setting all of those individually kind of helped me see like, oh, well, my brain just actually wants to do this. So what habits can I implement in my strategy that helps me not fall into those traps or those things that don't help my trading? So a lot of the feedback like that I give people has to do in relation to like what type of biases are you having in your trading and what can you do to counter that?
Interesting. Yeah, very interesting. So what you do is you basically set rules for the things you know you fall for. Exactly.
Whatever your habits are, if they're not good habits, like journaling is important because you see what you need to do, but implementation is more important than that's only one part of it. A lot of people will journal, but don't implement any change. There's no point in being aware of what you are messing up if you haven't implemented a system to change that issue, right? So knowing the problem isn't enough. And that's what I also find interesting. Like you mentioned, people DMing me, it's like, having the people know what their issue is. You don't have an issue knowing what the problem is. You have an issue in correcting and knowing how to correct that issue. So that's where experience comes in. Or you learn from someone experienced to be able to implement something that what they did to counter that specifically. And with that said, they can give you that information. If you don't apply it, then that doesn't matter anyway. So a lot of it more so has to do with discipline, more so than it has to do with the knowledge, because people know almost 9 out of 10 times what they're doing wrong, but they're not implementing something to change it. to take that one step further really quickly, a lot of people are choosing comfort over discipline. So that comfort of doing what is natural or easy to you is making your results insufferable. Where if you choose discipline, even if it feels against your nature in the beginning, it's gonna yield better results in your trading. If you're using discipline in a way that is helpful to your strategy.
I love it. That applies to so many things for sure. That was good advice. Tell me what people can find you and connect with you after this interview. What can they connect with you and reach out?
Sure. I'm on Twitter and IG mostly, and those are both Alyse, ALYSE _BMV. So that's it. Nothing else. If it's anything else, it's not me. I do click the blue check marks, so I don't want to hear anything about anybody else hitting you up. If it doesn't have a blue check mark, it's not me. Secondly, I don't hit anybody up, so know that it's not me if they hit you up first. I'm not bored enough to sit around each day and say, hey, what's up? It's everybody on social media. So, but that's where I am.
Awesome. I'll put a link below for that. Link to your profile. We'll go check you out there and they can learn from you. Let's connect again, definitely. Let's do another one of these interviews. Talk about more of these bias. That could be cool. I really appreciate the advice you give to my listeners here, Alyse, and we'll catch up pretty soon.